Good afternoon, everyone. My name is Maria Clara, and I am a first-year student here at the college, intending to study government and economics. It is my pleasure to introduce the predictions market panel. I'll begin by introducing our moderator, Scott Tranter. Scott has over 15 years of experience in data science and engineering, with work spanning PII-based audience creation platforms, machine learning workflows, and in-cycle experiment-driven activation programs. His contributions have been featured in the Harvard Data Science Review, Meet the Press, the New York Times, the Washington Post, and Fast Company. He served as an investor and advisor to Decision Desk HQ, which supplies election results data to new outlets, political campaigns, and business. Previously, Scott was director of data science for Marcos Rubio's presidential campaign, and he co-founded Optimus Analytics, a Washington, D.C.-based data and tech firm that was acquired by Dynata in 2021. He holds a degree in finance from American University and an MA in National Security and Strategic Studies from the U.S. Naval War College, credentials he half-jokingly says he mostly used to dominate at Battleship. Our first speaker is Jairam Joe. Jairam graduated from Harvard in 2022 and currently works at Kalshi, a policy prediction markets platform, bringing to it his experience in technology, markets, and political analytics. Prior to that, he held roles at Bain & Company and TikTok, giving him experience at the intersection of consulting, tech, and public affairs. Next, we have Michael Schwimmer. Michael is the founder and CEO of Big League Advantage, a company that uses predictive analytics to invest in minor league athletes in exchange for future earnings. Before entering the analytics world, he played Major League Baseball for the Philadelphia Phillies, and his work is often cited as bridging the gap between data science and strategic decision-making in sports. Finally, G. Elliott Morris is a data journalist and election forecaster. He has been senior data journalist at The Economist, where he developed polling and forecasting models, and more recently served as editorial director of data analytics at ABC News 538, overseeing political data coverage. Elliott is also the author of Straining Numbers, How Polls Work and Why We Need Them. Please join me in welcoming Scott Tranter as moderator and our incredible panelists, Jairam, Michael, and G. Elliott Morris.
Thank you for that. And last panel of the day after lunch. Hopefully no one falls asleep, so we'll try and keep it pithy. But first question goes to the Harvard alum, Jaron. And so just context here, right? So a lot of people in here were political nerds, handicappers, forecasters, pollsters, all that kind of stuff. So in that context, what's the use case for a prediction market in politics? Why should we care about it?
Cool. Thank you for having me. Yes, so a bit of a concept about Kalshi. It is a financial marketplace where you can trade on the outcomes of events, and that includes, political events, but also things like cultural events, sports, even things like the weather. So it runs the gambit. I have sort of like two answers to this. The first is, generally, the reason it was started is because Tarek, our founder, he was a trader at Goldman Sachs, and he saw how these firms and traders are trying to hedge on the outcomes of elections, and they were trying to do that by shorting certain markets or buying certain companies that they thought would benefit, and he had the idea to sort of create a marketplace where you could hedge and trade on these outcomes directly. I think in the political and election space, there is a big question, which I think is one of the defining challenges that we face just as a democracy, which is the information question that has been talked about previously. And it is about, there is a very fractured information environment ecosystem. There is, social media algorithms that are hyper-personalized, so you see perhaps what you want to see and what you will engage with. And there's AI now making that even worse, because you can generate photos, videos that look closer and closer to reality. And not just that, in the future, when they get close enough, even real videos and photos, someone could just say this is AI generated, and you have to now prove that it's not, right? And there's not a lot of technology yet that is very definitive on this. So the biggest challenge facing democracy is what happens when there's no longer a shared reality, and people don't agree on what is true, and some people even sort of lose faith in like the concept of objective truth itself. And on social media, like, you know, there's free speech, but that speech is free in the sense that you can say whatever you want at no cost to yourself. And that also allows for bots and other, you know, foreign actors to sort of come in and, you know, push these influence campaigns, you know, like at no cost to them either. And so the biggest use case for me and why I am passionate about this is we create a marketplace where people put their money where their mouths are, right? Like, if you believe that something will happen, you can now like back that up with, you know, financial resources, and we find that those financial incentives are extremely powerful in this marketplace, and it sort of, you know, people can say whatever they want, but it forces them to consider, like, am I actually confident enough in this to, you know, like back this up? And I think that is ultimately, hopefully, the use case is to have a sort of dashboard where you can go and see, like, what do people believe will happen, not just what they're saying, but what they're actually confident enough to put money behind. And that could be like a central sort of, you know, hub where people who come from different social media, like, you know, like they see different things on social media, like the men and women we talked about earlier, they can see, like, I'm hearing a lot of information about how this candidate or this election is going one way, and, like, you know, this candidate's doomed. Like, what do the odds actually say? What do people actually believe?
Quick follow-up. So one of the things you mentioned, the founding thesis of Kalshi was, you know, it was started, hey, how do we hedge political events, things like that. Michael, based on your experience, are prediction markets now, and if not now, in the future, are they good places to directly hedge political risk? Are they good analytics pieces?
Well, I think it's a variety of things. I think, first of all, I completely agree. Prediction markets are amazing, right? But the question is, are they predictive? No matter where you stand on the prediction market, it's a great thing, right? Like, if you don't think they're predictive, right? Because you think some people, when all this money came on, people are trying to buy the prediction market. Like, what? You know, like, well, if you think that, then there's a huge edge and you should bet on the other side. So it gives a huge financial opportunity if you do think that they're not predictive. If you come, again, they're useless, they're not predictive, well, then that's a great financial opportunity for you, A, right? But B, whether they are predictive or not, which is a completely separate question, right? I love that it makes people, you know, I would question, people put their money where their mouth is. Not necessarily. Like, I know big firms that will hedge their bets. So they think that, you know, maybe we'll call it a oil and gas company, that they believe Trump will win, but they're going to put money on Democrat to hedge their bet. Or we saw this, one of the biggest, you know, people that I know that bet a crazy amount of money on this stuff were the crypto people, right? And the big crypto people that were long crypto, that have tons of money in crypto, wanted to hedge that out. And you see a lot of money going towards, you know, that other side, therefore creating an opportunity, right, to go on the conservative side, in which case this would have been, you know, the winning side at this point. But of course, you don't know that beforehand.
So, Elliott, last, and I remember when we first conceptualized this pan, you're like, okay, what's my role here? And here's what it is, right? So these guys are talking about the utility of a prediction market. Put your money where your mouth is. Michael Schwimmer is talking about how financial institutions use it to do all those things. The funny thing is, you know what moves those little lines? Data, right? Polling, forecasting, opinions, and, you know, the money that moves those lines theoretically is a synthesis of data that you and other people in this room create. So do you think it's accurate that these prediction markets, when they put a fine probability, they're accurately distilling some of the political information out there?
Thanks for asking that question and for having me on the panel. I will answer a different question, as is my training.
Very DC of you, yeah.
If the question is, do prediction markets provide a synthesis of information beyond the polling data? The answer is yes, and that is an incredible use of the technology. But if they're not doing that in an accurate way, how much of use are they to all of us? That is the sticking point from my point of view as a journalist and a traditional forecaster, we might call it, drawing the distinction between prediction market forecast and sort of a statistical forecasting. And to me, the answer is they're not more accurate, or at least they're not proven to, over the long term, be more accurate than polls. So let's not throw out the old data, the old world of trying to make predictions about the future, in which you calibrate your historical predictions to historical events and use those techniques of pattern recognition, either a statistical model or a mental model, to make predictions about the future. And if over time prediction markets do obtain the ability to outperform traditional forecasts, then that's an incredible, use of this new technology, access to these markets. But at least for now, I will start by pouring some cold water on the entire premise. Yeah.
So here's a really nerdy in the weeds question I was going to save till the end. Prediction data, right, theoretically is like a daily rolling poll. Is it going to be something you're going to look at for an independent variable in your 2026 forecast?
I think there's a great opportunity for someone out there with more time than me to update a traditional statistical forecasting model where you understand the inputs and the outputs and historical correlations with prediction market data. I mean, that is live prediction odds, where traders are reacting to events in real time, not something that you can get from polls-based forecasting. And that is in many times what audiences want. But we don't know if the swings in prediction markets actually translate to changes in real-world probabilities. And I'm not sure we're ever going to figure out that problem. But if someone wants to take for example, historical changes in probabilities and map them onto like changes in future statistical probabilities, that's probably a good use of time.
Yeah. Michael, do you have something?
I would just add to that. I think that the key term there is historical, and my belief, and I believe backed by data on this, is the more recent you look, and they're getting a lot more money coming into the political prediction system, that it is taking over polling. And my question is, if it's not, right, like if your thesis is right and polling and the data is actually more predictive than the prediction markets, why aren't you betting a ton of money on the other side?
Well, I'm not allowed to, being first off. I mean, maybe Bill Ackman would say there's no insider trading, so we should.
Well, on Kalshi.
Ethically. Yeah, on Kalshi, I think I'm prevented.
Yeah. There's your dig at Polymarket, right?
Yeah. But, I guess the bigger question here is, why don't political practitioners participate in the markets to improve the synthesis of information in the markets? I guess we'll probably trend toward that, especially as, as the vig, so to speak, the edge people can get from their traditional work increases in the prediction markets. I'm not sure that's a good thing, but I imagine people will. I'm not sure if that's a good thing for the traditional work, but that might be good for the markets.
It's a good follow-up question based on what you said and what you were asking. So, yes or no, do you think there is alpha to be had in current prediction markets?
I can say this. Every data scientist that I knew just about going into this election, and people looking at the polls, people looking at the historical results and all of these things, I mean, I don't know. I don't think I know a single person that thought that Trump with the odds was a good bet. Like, it was almost all.
How many of them put money on it, though, to your point?
A lot of money.
Okay.
Like, these are the people that literally do this to try to find the alpha, try to find the edge. They look at the polls, they look at all these things, and what the data is showing them, like really, really, really smart data scientists that do this for a living, in fact, raise funds to do this. Like, went to all these people, like, I have an edge here. Like, you see how much, what was the total handle in the presidential election?
So last fall, the presidential election did $1 billion in volume.
So $1 billion in volume, and that's just from Kalshi.
From Kalshi, yes.
Yeah, Kalshi, excuse me. I apologize for that. And there's, not to bring up competitors, but there's Polymarket. There's all kinds of other markets, right? I mean, there's many billions of dollars at risk on this, right? And people think they have alpha, and there are people matching the bets, right? Especially you have to have somebody matching the bet, right? And so if you have the smart data science people looking at the polls, looking at the historical events, landing on the left side, and it didn't work out that way. Now, you could argue that's an outlier event, right? Because, of course, in every prediction, there's always a chance it's the other way, right? That's why I always hated people like the 2016. It's like, oh, the data was wrong. It's like, no, like 20% can happen. It happens 1 out of 5 times, right? Like, if you,
So the whiteboard case for a prediction market is, with enough participants and enough capital, it will be a perfect synthesis of the outcome. So right now, you're saying there's alpha there. is $100 billion bet on the presidential? Would there not be alpha there? It's a perfect synthesis of data like Elliott produces and everyone else. Or at what point do these prediction markets not create opportunities for people who think they know better?
I think I disagree with that thesis. That's the stock market's thesis, and I disagree that it depends on where the money's coming from, right? And by the way, there's going to be more and more money because as we get more and more divisive, and we get more and more right people getting right-wing news and left people getting left-wing news, they're going to think they're right more. And you're going to see, one thing I would bet with a almost certainty is the amount of handle going on presidential elections will increase every cycle for a long time. Because you're going to get more divisive. Yeah, a lot of them.
I hate to take over. Can I?
We got plenty of time.
Which is, what was Kalshi's final prediction for Donald Trump's chance of winning the election?
I think the morning of election day, it was 57%.
57. That's not so different than 52, right? Or 50, depending on your statistical model. I mean, over the long term, if they're always 5% more accurate in the right direction, I think we have proof that maybe this tool is offering something that a mental or traditional statistical model isn't offering us, but I'm not convinced yet.
Well, it needs your stuff, right? Your stuff is so critical, right? That's how you get the numbers.
Can I get 1% of the prediction market flow?
Yeah, Citadel. Yeah.
So yes, prediction markets are still very nascent. They are a very new thing. For some context, we did $1 billion in volume last election cycle. We, won approval from the CFTC to list elections contracts October 2nd, 2024. The election was November 5th. So that was in a month, right? And there was a lot of movement. It was not necessarily you had, months and months of data to go on. But I will say during that month, we really never had Kamala Harris ahead in the market. It was Trump was up by 65% at one point, a chance to win, and then it came down a little bit, and then he bounced back to 57%. Another recent example was the New York City mayoral primary. Most of the polls, even in the last days, right? There was maybe a dozen polls. Two of them, I think it was Emerson and PVP. They showed Mamdani potentially leading or winning the Democratic primary. The rest of them had Cuomo winning by double digits, right? And
so did Kalshi before polls closed.
Sorry?
So did Kalshi before polls closed.
So no. So actually, on the morning of election day for the primary, June 23rd, our prediction market it was Cuomo at 51 and Mamdani at 49, right? It was very close, and that was much closer than any of the polls would have it. If you believe the polls, if you looked at the polling average, it was still Cuomo by 12 or 14. And that is because they were taking into account the early voting data, at least I believe so, that showed skyrocketing turnout in Astoria, where Mamdani's assembly district is, and parts of what someone called on Twitter the commie corridor of New York City, which is parts of Brooklyn, Williamsburg, Park Slope, that were much higher than places where people expected, Staten Island or outer Queens or in the Bronx, where Cuomo's sort of base was. And that is why, before any vote data had come in, the traders saw this race as a toss-up, going into election day. And the last thing I'll say is, for forecasters and pollsters, I think there is absolutely a role for them. This is a very symbiotic relationship where polls, absolutely shape how people perceive and see these races. But not all races can have a depth of polling in them, right? There's a lot of congressional districts, a lot of mayoral races, a lot of races that don't get as much polling attention, forecasting attention. It takes a lot of resources. And also international elections where most US pollsters aren't that active. And we can be everywhere at scale, covering the Lisbon mayoral election. And there's people I'm sure who know a lot about that and have thoughts there. And that's just things that, traditional polling, forecasting, it probably doesn't make sense to cover all these races. But we aim for truly global coverage and the depth of coverage that I think is unparalleled.
I add one quick thing there, and that is that we're going back to 57% on election night, 52% on election night. Before that, symbiotic relationship is so key, right? Again, all this stuff is so critical, getting the polls to get enough data information in the machines to be able to build a prediction to make a bet, right? Without that, it's a lot less valuable. But think of it this way, with still 57% of the money on Trump, all the hedgers, think about if you're a company that's going to hedge, what percentage of that money, which is again, we call false money in the market, not betting what you believe, but betting to hedge out your position, is going to be on the left or right. Almost all of it is going to be bet on the left. Crypto people, oil and gas people, there's very few companies. If you look at all the companies and all corporations, very few are going to say, I'm going to bet on the conservative. Are there? Of course. Clean energy companies, whatever. There could definitely be people doing that. But if you look at the scale, there's going to be way more money hedging out on the left side. So that's still in that 5% edge. I would argue is an artificial edge. It's probably closer to 10%. If you only want to look at, which is again an impossible situation to do, bet of what you actually believe without the hedges, right? So it's even more so than that.
Do you think that phenomenon, as the markets get bigger and there are more market participants who are not betting what they believe, but betting, to risk their portfolio, is that going to have some adverse effects for the people who use these prediction markets because they don't like to read a polling average or they think it's more accurate?
I mean, it could. The line is all markets tend towards efficiency over time, like all that stuff that you want to.
That's on the whiteboard, yeah.
Your econ class that everyone wants to teach you, but that is true
because that goes against what Kalshi's saying. Kalshi would argue, hey, we're a better distillation. Yeah,
I would go again. That's where I'm sort of in the middle here. It's like, is it predictive? Is it a tool, or can you take advantage of it? And my point is, it depends what kind of money is in. If it's all smart money, people will bet it. If it's like the stock market. Right, that's one thing. But again, you have people hedging out and doing different things. You're going to get different, you're going to get different events and a potential advantage to make money.
So one follow-up to that. If you're just an average person watching elections on election night, and you know what you know, you have your opinion on prediction markets. Do you look at the prediction market and say, hey, I understand that there are hedgers in here, people betting on what they don't believe in, and therefore I'm going to discount that when I look at, say, Elliott's forecasts and averages, or like, how do you look at that as a user knowing what you know or what you think about prediction markets?
I think there's errors in the polls too. I think there's errors in both.
Yeah.
Right. And I think that the issue too with like polls deal with data. And again, data cannot be wrong because it is actual numbers, it has actual facts. But people going in, data can say, I'm an independent, but I'm going to lean towards Democrat, and then they go in the poll and they vote Republican. Right. So the data is not wrong. That it was a point in the Democrat favor, and they actually voted as a Republican. Right? Like, these are the things that can happen. And I think the smartest people are the people that can understand, like, when that stuff happens, which is the direction it's most likely to go. Is it more likely to say I'm going to be a Democrat and then actually in the poll go Republican? Or is it more likely to say I'm a Republican, then when I go in the poll, actually vote Democrat? So, like, where can the polls be off? And you're talking with these polls, these are such tight elections that if you can get 1% of people more going one way than the other, that's a big deal.
Same question to you, Elliott. Obviously, you've got a perspective on usefulness of prediction markets, but your background, obviously, forecasting, polling, all those types of things. Is a prediction market something you're going to look at with all your other data sets as you go into election day?
Okay, you've asked me the same question twice, so I think I have to answer it. I think there's a problem we have to solve. How to integrate the prediction market odds with a statistical model so that we know what the model is doing. At least from a journalistic point of view, we have to know what the model is doing so we can communicate about it. That, there's a couple of ways that you can think about how to do that. One would be to look statistically at how some percentage change in the market reflects a change in vote share, or vice versa. You can look at how the polls change and see how the market reacts. If you do that, it's typically like a 10 percentage point change in the market is equal to about a 1 percentage point change on margin between candidates. So you can kind of back into that, how you might update your model. But again, we have to test these things historically. But that could do some really interesting things for readers, which is like, people do expect forecasts to change after debates. Our line has always been, we don't have horse race polls to update the model until at least 3 or 4 days later. There's a world in which you can use the prediction markets as a, hate to say this, Bayesian prior to update your prediction market, or to update your prediction model. I think that's pretty cool. So I do think there's potential value to be had there. But let me just say one more thing too. New York primary polls sucked because primary polls often suck. They're very hard to do.
But he's saying Kalshi just sucked less.
I think there is a way for people smart money, to use the market terms, to discern that the polls are wrong in these primaries, or at least that there's more uncertainty in those polls, and to use that information in the market. So to me, these things, like those things make sense. It makes sense why Kalshi would provide more of an edge, or any prediction market would provide more of an edge to people when you're in a market with more dumb money or poorer information, to be more generous.
Also, that like on, this is like a little bit tangent, but like to like one of the previous panels, like on election nights when votes start coming in, prediction markets are very reactive to that. Like, I think, it was Steve Kornacki yesterday who said that when he saw Osceola County come in Florida and it came in like Trump +2, he was like, it's over, right? Like, and that's something that, he knows and very early on, and something that maybe like the New York Times needle will show you. But prediction markets can do the same thing, especially like if you have drawn out vote counts over like several days, right? In Pennsylvania, they were saying that they were trying to communicate that like this should not be a surprise if Biden overtakes Trump because these are like mail votes coming in late. Well, I believe that prediction markets would have had Biden at 95% chance of winning. So like over that entire course of time, because people know like what is like smart money knows what's out. And if you had that, like, and people saw that, it maybe wouldn't have been as much of a shock when, like these states were called for Biden. Because once the actual vote data starts coming in, right, like that's when like polling and like forecasting, that kind of stops when like election night votes start coming in. And afterwards, it's like, how do you communicate what's actually happening? And I think that's still where prediction markets are very useful. And the New York Times needle is great, but it's not there for every single election. It's, very resource intensive, and it's also not international. So like, it's another place where prediction markets provide like valuable information to the public.
I think it's we just had on the last panel, right? And they're like, we need to synthesize information to get it to our viewers quickly. And that's, he was just the name blank right now, but trying to be like, I have to explain that we got mail-in votes now and I got real votes here, but it's going to use the prediction. Like, there's a great tool. He's still 95% favored here. Why is that? Because of this. I think it's a good one quick data point. People can understand betting markets now. Quick data point to show as a tool of why we're seeing the order that we're seeing.
Yeah, it's kind of like when you watch sports and you see the same graphs, probability of winning. It's an interesting, I wish I was like Salvanto and brought slides, but everyone should go look at the New York Times needle, Georgia, and then go pull up the Kalshi market from 7 p.m. to midnight, and you can see which one resolved faster. And prediction markets are going to get better. Needles are going to get better.
No, what's the answer?
The answer is the New York Times, you would have probably had anywhere from a 4 to 6% advantage. Go look at it, everyone. They were all data people. Go pull it. You can look at it. And it's not a slight, it's an interesting point because you can see how Kalshi resolves based on data out there, right? Because that's all it's doing is it's pulling in data it has. I'm sure someone who was betting on Kalshi at that point was looking at the New York Times needle, was looking at polling, was looking at ABEV data, was looking at, hey, did Fulton come in for Harris the way we thought it was going to be? All that fun stuff. Interesting enough, a follow-up question for Kalshi. What is the, how do I put this? It's good to have context, but we're in a brand new area of regulation. We're in a brand new arena of like who can participate and things like that. Is there going to be a scandal in the next 10 years where we've got some campaign manager hedging their candidate or something like that? Is that a problem?
Oh, they're doing that. They're doing that already. They've done that for years.
I just want to get the company line, but yeah.
Okay. So if they're doing it, I don't believe they're doing it on Kalshi because we have when we are CFTC regulated. So when users sign up, there's actually a waiting period. They put in their identity information, their address, their social security number, and we verify all these things. And we have a dedicated sort of fraud and surveillance teams that track when trades are placed. And if there's a big spike before, let's say a candidate announces, we have market on, will a candidate announce for president? If there's a big spike, then we investigate. We're this looks like someone had inside information. Now
you haven't looked at my prediction market history, have you?
I think, whenever there's big world events, even, right after, we had to deal with this, right after, Charlie Kirk was assassinated, we went to the markets because there was a huge, we unfortunately had a market that asked, will Charlie Kirk run for office? And obviously there was a lot of movement in that market. And so we went and we were like, let's make clear that like there were no suspicious trades made before that. And there were none. The market, no one had placed a trade there in like months. So like we were like, okay, like that at least is fine. But we are very like cautious when it comes to like big announcements and like results. And we try to like, do identity like that's one of the things that we do that, our competitors don't do. And you literally will have people on Twitter, like for example, Bill Ackman, he was telling Eric Adams, drop out of the race and to take care of yourself financially before you announce it, put some money on yourself to drop out. And like that was just on
Would you have turned him in if he did?
Well, I guess that wouldn't necessarily be illegal.
It's not illegal yet, right. But maybe, yeah.
So like, it's basically like if our competitors want to join us in the US, they're going to have to start playing by the same rules that we do, which is CFTC regulation.
Makes sense.
I think in the example you use, it's obviously not that big of a deal. When it's there's no control over any event. When there's control over an event, it's completely game changing. And it's the exact opposite, right? If you know, like you're a campaign manager and you know something's going to break because your candidate's going to be involved in some scandal, and then you bet like but you can see all this again. This in the sports world, you can see all of it. All of a sudden, there's a big bet on a team. This is how Tim Donaghy, the NBA ref, gets caught, right? You can see, the beautiful thing is you can always follow the money, and you can see the line movements, and you can see the issues. So it should be helpful moving forward.
Before we get to audience questions, one final one, because I imagine the audience is going to eat up the rest of our time. How are we talking about, from each of you, how are we talking about prediction markets in October of 2028? If we were to do this panel October 2028, what would we say about prediction markets and whether they matter or not?
For elections?
Yeah. From your perspective, right? Yeah.
I think the election will just be run off of Polymarket.
What do you think, Michael?
I think everyone's going to be shocked with how much money there is going in to it. I think the handle will be, I would say 5 to 10 times as much as it was. I would predict that. But I would bet any amount of money it's a little bit more than it was, just any amount more.
Yeah.
And I think that it's going to be used a lot more in journalism. You're going to hear a lot more about it. They just started, and now it's going to be a lot more mainstream, again, because I think it's really quick, it's concise, easy to understand. I will say this, I'm not sure if it's going to be more predictive of the actual winner, though. Because I think there's going to be a lot, even though there's going to be a lot more money, a lot more handle, I think it's a lot more dumb money. And when I say dumb money, I mean people that are looking at their feed and be like, oh, I know I'm going to win. I'm going to be right. That's dumb money, right? Like that's what it is, right? It's not people building algorithms, models to figure this stuff out that would be considered the smart money in this case.
Makes sense.
Okay, so I'll give a little bit longer answer. Like I
bet you do.
I want to so this is more context about Kalshi and its journey. So, like I said, we really didn't start gaining mainstream attention and traction until the election last November, when we did $1 billion in volume. And, last September, we were 3% of the prediction market volume, total prediction market volume. And if you fast forward to now, a lot of people were saying, oh, this is just an election thing. Like, there's no way they can find a good product market fit for any other category. And this month alone in September, we have already surpassed $2 billion in volume in just this month. And there's no, election or anything like that, right?
How much that's NFL betting?
Oh, I mean, a lot of it is sports, right? Because
all of it.
Right. Well, not all, but a lot of it is sports. And right now we have 62% of the global prediction market volume. So we have gone up by a lot. We have surpassed Polymarket, and we are only active in one country, and there's a lot more countries that, hopefully, international launch soon. So Tarek always, our CEO, he always says that this is a market opportunity that could be worth hundreds of trillions of dollars. And, I think the belief is that this could be even bigger than, the stock market, these contracts on events. And, that will take a long time to get there. But I do believe that by 2028, we could see around $100 billion of volume placed into these markets. And my hope is that by that point, prediction market statistics across not just the presidential race, but across key Senate races and House races, and big questions about control and stuff like that, and even questions about like the margin and like specific electoral college like scenarios, as in like will these states vote together or like stuff like that. They'll be cited in news media, in social media, and like podcasts and things just as easily as polls are cited now, and that we will have an interface where people will also like come to us and look at like how these odds are changing on election night, and hopefully, in our first election, a week out before the 2024 election, across all of our election markets, which includes not just who will win a state, but we had markets on will these states vote together, like what margin will Trump or Harris win a state by. A week before the election, we were at about 90% accuracy, and obviously want to increase that. So I think by 2028, like prediction markets will be fully mainstream. We were just in South Park, right? Like that's like for us that was a big deal.
That is a threshold to
Right.
growth.
And I think that more people will be aware of it, and there'll be more institutions, right, who provide liquidity and a depth of liquidity. More institutions will use us to hedge, and that's also like a usefulness that are in the markets. And more traders, smart money, dumb money, like everyone will be sort of aware that this is a thing, and will have their own opinions and look to it for a source of information as well as a way to like make trades and hopefully like make some money.
Makes sense. Questions from the audience. Logan, so you can get one in every panel.
I feel like by definition, right, the users are going to differ a little bit from the American people, and that's probably going to be reflected in the markets themselves. Like, I'll give you an example, right? This is one where I think some of these betting markets got it wrong. In the 2024 GOP primary, you saw Ron DeSantis with an extremely high percentage chance to win. I think even I could be wrong here because I'm doing this off the cuff, but I think they had him at like 40% chance, even going into November. Maybe that's too high. You would know it since you're doing it for work. But it did seem
November of what year?
Of
23.
Of 23, when we're leading up into the primaries. And at that point, DeSantis' numbers had cratered. It was like pretty unreasonable to say he had that high percentage. But I think it kind of makes sense that the markets would show that, right? Because almost certainly these markets would have people that have higher disposable levels of income, and they would be more politically engaged, which are the type of voters that Ron DeSantis was doing significantly better with in the GOP. So my question is for you guys, how much do you think this gets skewed by the type of users that use it and the biases that they're going to bring to the table?
So that was not a market that we offered because we were still suing the CFTC at that point. But on Polymarket, like it is a crypto native prediction market. So it's like, I very much believe that the, demographics would be skewed towards people who maybe are, more like pro DeSantis, stuff like that. But I think two things. First, in the long run, if your concern is that, the people on prediction markets are not representative of the overall demographic, then you should be celebrating that more people are trading on prediction markets and more people are adopting it, because that is what will like even out the demographic differences, right? The other thing is, I don't know like exactly how the odds changed on that particular market, but I would expect that at some point they like reflected reality. And my personal philosophy is that even if they can be a bit slow, like these markets will correct as people realize that, hey, like maybe Ron DeSantis is not, the odds-on favorite to win the GOP primary. So
My answer to that would be, I believe, and if memory serves, if you look at the polling data, it was also extremely heavily favored in DeSantis' side.
Not by that, no.
Not by that amount.
At that point, it was down to like 20 or 30 points or something. I could be wrong off the cuff,
Yeah.
but like he was cratering very fast.
To me, I feel like there's always been an anti-Trump effect in the polls in the markets of people not admitting that they're Trump people, and then they are. In that, I just feel like there's a lot of that going on. And so therefore it's going to inflate other candidates. Personal opinion.
Sir. Red shirt. And then blue blazer.
Hi, thank you all for being here. This is super interesting. I'd love to talk with you all more about this. So one thing that I picked up on from this is the argument that prediction markets and polls can work hand in hand in places where polls can't reach. And I think that's a great argument. So 100 years ago, Wall Street had odds that you could bet on presidential markets. And this was before polling was like widespread. And they did pretty well, right? Because there is diffuse information that's out there that can then be reflected in this, or in like a mayoral race in a city outside of the US or something like that. My question is more about political events that happen that may not have information out in the public. So the thing that I'll point to was this year's papal conclave, which
I knew you were going to bring that up.
No, because we've talked about this, which, if I remember correctly, was a pretty high volume event for prediction markets, but was also an enormous miss. The man who was ultimately elected Pope had less than 1% chance the entire time he was on the market. So this is something that's interesting to me because the people who make that decision, the bishops, should not, if we, have either rules or laws, or like, I don't know what the church says about this, they should not be insider trading on the outcomes of the papal conclave. But
is that in the catechism?
but there's still a market on it because people are interested in it, and yet the information shouldn't be out in the public. So I guess my question is like, how do you resolve, and should there continue to be markets on something where the public may not necessarily actually have information that makes them like wisely bet or trade, when the only information could come from people who shouldn't be allowed to be on the market? Does that make sense?
Yes, and I will actually say that like the fact that the winning Pope was at 1% is actually like proof that there was not insider trading on this market, which is good. Now, I think there's different types of markets on prediction markets. Like there are ones that are really, really good for information because there are a lot of public information, and there's ones that are more like speculative. And that can be, we have a lot of markets that are not just politics. Questions about, will Taylor Swift get engaged this year? That was a big market. And who will win the Oscars, right? Those are markets where the public probably doesn't have a lot of information. They might have opinions, but maybe they don't have, the actual, a lot of facts or statistics to back that up. And some of those are more, for speculation or just for entertainment purposes. They're not as informative as markets where there is public information, which is why where I believe actually political markets and elections that are not the sort of super secretive kind are one of the best use cases of prediction markets because they provide they take into account all these data points and as a result have more accurate forecasts than some of those other markets.
So from a news and politics perspective, this is, I hear a ton of alarm bells going off in my head, right? If we are supposed to be, as reporters on prediction markets, telling the public, oh, there's a 47% chance X wins this race based off of the smart money going into the market. Oh, but actually the information going into that market is primary polls, so it's not very good. Or, there's some industries in this poll of South Texas that are hedging against the winner winning, so you can't really trust that market either. Then us reporters are offering so many caveats that are necessary for the interpretation of that data. I've been a big I've said this a lot, but people who report on polls should be pollsters, or at least scientifically aware of the process of polling. And I feel like I'm getting the interpretation, I'm interpreting that Kalshi would like everyone to be reporting on prediction markets, but there's just not enough experts out there talking about the markets to make that a good use of information. That's my opinion. That's what I'm worried about.
Jacob.
So my question is this actually good? Because I hear, $1 billion on the last presidential election, tens of billions in the future. If 20 years ago your friend came to you and said, hey, I got $1,000 on the Lisbon mayoral race, do you want in on this action? You would probably look at them like they had a gambling problem. And so are you concerned at all that you're providing the tools for a lot of people to lose a lot of money because they don't actually know what's going on? Like we've seen in sports betting, 95% of people lose money over time. a quarter to a third of sports bettors are skipping bills that they have to pay because of their losses. They are running credit card balances because of their losses. Do you have a concern about kind of the societal or the moral implication of expanding the ability to bet on every single event that we see taking place around us in our world?
Well, I'll start with that. And this is a very, very important distinction. You're 100% right in sports betting, and I think it's more than 95% are losing money. This is not that. This is an exchange. It's very, very different than a sports betting market. So sports betting market, you have to give minus 110 to both sides, right? So you have to risk 11 to win 10. So if you win 50% of your sports bets, you're going to lose a ton of money over time. In exchanges, when you're making a market, someone's taking the other, it's me betting versus you. Not me betting versus the casino and you betting versus the casino. So it's very different. There's not that issue.
But do you think that people, your lay people who are putting money into these markets feel that way? Or if they're betting on the Eagles to win next week and they're betting on DeSantis to be the nominee, in their mind, they consider those to be two bets that they're making, and they'll either win money or lose money, depending on the outcome.
I mean, you bet on Apple stock too. You can make money and lose money. I mean, there's in the stock market, again, goes up over time in theory until 2008 happens, right? But there's a huge difference in markets that are exchanges and markets that are there to take the juice. I just want to make that distinction.
Shall we?
Just think about from a kind of a data collection perspective, right? Because traditionally we have surveys, we talk a lot. I mean, now we also have generative AIs. So as a data scientist, I was thinking about the positive use of the market here. Think about it is a way of collecting data. What are the regulations on that aspect? Like, can you creating other betting events? For example, betting on how well decision desk will be doing. Are you allowed to do other things which you can design for collecting data purpose?
First, when you refer to betting on how well decision just be doing, is that just based on their polling numbers or how a company will do or something like that?
But you can create derivative products, right? To think about as a way that if we design well to first encourage all the company to do better, but also knowing how the public understand these things themselves, how the public you can inject these kind of components to it. It's a way to engage the public, right? From a positive perspective. But I'm just wondering whether you're allowed to do all those things, because now you're creating other products instead of just the outcome itself.
So I don't know if we have a ton of derivative ones that are not the outcome-based ones. But what I will say is this: every single market we list is based on a certification that we file with the CFTC, and it has to get approved. And those can be broad in terms of what will the margin of victory be in X election. So you can apply it to many elections, but we do need to file that, and it has to get approved. And then when it comes to questions about companies and other organizations, for example, there are questions that we considered asking about, will a company overperform or underperform their earnings estimate? Will they beat it? And that actually requires SEC approval as well. And so the benefit of being a fully regulated exchange is that it's not just us putting up whatever question we want, right? These have layers of review, and then there are mechanisms in place to ensure that there's if we want to create a new type of product completely, that will require a lot of work with regulators as well.
We'll get this side of the room. I'm sorry. You up there, and then you won. The young lady behind you.
So I come to this as someone who is a political practitioner and has been and does forecast from that angle. And I guess also as a former Data for Progress employee, having some history with betting on your own shit going rather bad. And I guess my question is like, what is the democratic utility of this existing as a concept? Is prediction markets existing as a concept? Like, polls are for informing the public, learning about things. Forecasts are for either public interest or informing campaign
Who knows
decisions.
what forecasts are for?
Yeah, well, but like, what is there a democratic utility and purpose of prediction markets?
Well, sorry.
One sentence: knowing where people actually stand. I would say, like his opening argument was, which I agree with. Like, where do people actually stand? Like, people can say a lot of things. Where are they actually going to put their money? I think is valuable to know that information. Personally, I like to know that information.
Yes. Like I agree. I think there are like a ton of informational issues, right? And like I said at the beginning, like with social media, with AI, like we have a likely scenario where people don't really know what is real that is across their feed, and people sort of retreat to their online communities and like they don't know what to believe. And frankly, like the question that I'm trying, that like I think Kalshi is trying to solve is how do you design information systems that incentivize truth seeking rather than engagement, and that are profitable at the same time. And there have not been a ton of great answers to this, unless you like trust the big tech companies and the AI companies to regulate themselves, or if you trust the government to move quickly on regulation. I think this is a way to create a private sector incentive and a way to like show what people, as Michael said, really believe, and sort of like as like a way to cut through the noise. Like I'm sure in some circles, you could believe that one candidate is for sure going to win. All you see is like great clips of them and like clips of why the other candidate is like tanking in the polls, and I see that a lot, right? People, even with polls now, they like argue over like whether this was a good result, a bad result, whether this poll should be like taken seriously or not. And I think these markets are a way for people on both sides to act and say like, do I actually believe that this candidate is for sure going to win? And when you aggregate all of that, you can create a place where people can like look at this dashboard and be like, okay, what do people actually believe will happen this year? What are the chances that like, X event happens or this outcome occurs? And I think that sort of clarity of information in such a fragmented information like ecosystem can be potentially like very valuable in our democratic society.
I think that's a great pitch, and it would be great if it were true. Unfortunately, I think we've established that the markets aren't truly efficient, that they aren't accurate in the long term yet. And so my worry, maybe I will tell a story with the arc of polling. My worry is that 20 years ago, news networks had tools that people had proper expectations about that could tell us a lot about democracy. There were polls of polls in the 1990 election. And in 2000, there was a lot of non-horse race polling on CNN coverage. Just go back and watch it, it's fascinating. Then in 2006 through 2012, you have a huge increase in the demand for polls-based election forecast probabilities rather than the polls. And people, some people cause this, a dramatic increase in the expectations of accuracy of the political poll. And as a function of that, you have a degradation in trust in those surveys, something that nothing else can do. Offer a direct measurement of, when properly conducted, what people think about literally anything. And you understand the measurement error of that process of sampling and non-sampling error. And so my worry is that maybe in 2028, this is my non-joking answer to your question earlier, I worry that prediction markets will overtake polls even more, and that the democratic utility of the survey will be degraded even more by the increasing popularity of prediction markets. That would be my worry.
And I think I'm going to use your words against you. Say like, I agree with you 100%. Like, using the right scientific process to get this information. If only that were true. The problem is we have news networks that will report data and numbers only to try to argue their side, and we get this mush of information. But yes, if only that were true.
I'm with you there.
You know, and that's the
Fair
issue.
enough.
And so now you're stuck between this mush of information that nobody can understand or feed, or like that's always leaning towards one side, or prediction markets, which may not be as efficient. It's like which is better at this point? And I'd argue the prediction markets. But yes, of course, if we could just get to the scientific polls that people just could understand and didn't need clickbait to do all this stuff, you're right. But I think both are unrealistic. And so it's what is the best utility of it, to me, is where the money is, even though it is not perfectly efficient.
Well, last point. I would also just note that like this again is a very early days for prediction markets. We don't really have a lot of long-term data yet, and I don't think that you should necessarily there's a lot of questions out there. I think that in theory, yes, I think this could be a great democratic utility. I also don't think it makes sense to necessarily dismiss it based on a very early product that is out there. You should not sort of judge the viability of the automobile by the Model T, right? Right,
but prediction markets are not the internal combustion engine.
Well,
it's in beta, you know?
That's fair.
That's what people are willing to put their money on.
I promise one, and then John, and then we'll go. You get seconds at the buffet.
So I have a lot of questions about prediction markets.
Let's keep it to one.
Yes, I know. I'm only going to ask one. So you brought up the Pope thing, which to me is very, because I'm Catholic. And one of the interesting things about the whole election of the Pope is that it's very much about humility, right? You walk, there's this very famous quote that's like, if you walk in thinking you're going to be the next Pope, you will not be the next Pope, right? So I think prediction markets make very little sense because like Pope Francis and the popes before that, often they chose the person who was unexpected. They chose the humble person. They chose a humble servant of God, whatever. My question to you is, there's a lot of doubt around these prediction markets. What is the dream scenario or one of the best, most accurate scenarios you've experienced when prediction markets most accurately reported? Give me the specific conditions of that scenario and what led to being accurate.
Prediction markets, are they Catholic?
I don't think so, but...
okay, so I think I would say that there's a couple examples of where prediction markets are more accurate than other information. I think I cited the primary, for example, for New York City mayor. Polls are bad in that system, and if you can't trust necessarily the polls, then what other information are people basing it off of? And it's based on live information that people see on the ground, what's happening. I think there's also examples of where there are, major scandals that occur or things that happen and the markets react initially, there's a lot of volatility, but then they sort of, come back and resolve that volatility much faster than, you would expect, because people are thinking initially this looks bad, but how will it actually impact the ultimate outcome of this race? So I guess a recent example could be the Texas Senate primary on the Republican side with Ken Paxton and John Cornyn, and there was a lot of negative news articles about Ken Paxton that came out, a scandal, and his odds initially dipped pretty significantly, but now they're pretty much back at a 50-50, which I think shows that if you took polls, you would probably see a dip in his polling numbers, and then a week or two later, you would probably see that potentially him bumping back up. So that whole process was just accelerated on the prediction markets because people do look at the future and what they think will happen ultimately, next year, instead of just what is this current state of the race now.
So my question is on company. Just talk about prediction markets as companies. So does ownership of the prediction market companies in 5 years, do they become publicly owned? Do you have investments by hedge funds? Is it mostly private equity money or something else? What does it look like in 5 years?
Unfortunately, that I cannot give you a good answer on.
Michael's got an answer.
I mean, I think just real quick, it follows. This is where sports is usually the last thing to react, but this is actually the first thing in this world, and they're all publicly, almost all publicly traded now, whether through SPACs or and there's private equity money doing all of this stuff. So it would make sense for exchanges and political markets. Again, I don't know the regulation side; that's not my area of expertise. But if it follows that, and there is some sort of regulation, it has to get PE money.
And with that, we've got to wrap up. Thank you very much, guys. I took that last question, so I don't have to say a lot here. Can we all give a hand to Ryan and Liberty and Harvard University for hosting us here? They put together a lot of work. Thank you, everyone, for coming. Thank you for all the moderators and speakers. I happen to believe Ryan, I'm going to put him on the spot, is probably going to be doing this a lot more. So hope to see everyone at the next one. And with that, we're all done. Thank you.
Conversation.